There are huge tax changes coming for 2025. Are you prepared for them and you know what is coming? We'll get more into that in a minute. My name is Merrill Taylor. I am a CPA. I've been working with clients on taxes for over 20 years, helping prepare tax returns as well as do advanced tax planning, helping clients save anywhere from tens of thousands of dollars to millions of dollars in taxes. If you like this video, please subscribe and go to taxtutor.com, sign up for our newsletter. We'll send you a weekly newsletter with these updates to help you stay on top of what is going on. So we wanted to talk about 2025. 2025, as it comes up here, is going to be as we're in it, is going to be a pivotal year for taxes because of a couple of things. If Congress makes no changes to the tax laws whatsoever in 2025, they pass no tax bills, maybe there's gridlock or who knows what's going to happen, nothing gets passed, many tax laws will change going into 2026 because in 2017 they passed what was called the Tax Cuts and Jobs Act that significantly changed taxes for every single U.S. citizen. That provision, many of those provisions that were in that law were set to expire at the end of 2025. That's why we're going to see huge tax changes at least going into 2026. Even if there is no law passed, then these laws will expire and automatically, retroactively go back to what they were before. We'd like to walk through some of those. We don't know if there's going to be any action. We highly suspect there's going to be some tax bills that will come that may make some of the things that we talk about expiring permanent. And so we'll kind of go through those and talk about it. That's why we invite you to subscribe, because as tax laws change and as things roll out this year, we will be going, we'll be talking about those and helping you keep on top of those. So first off, let's talk about one of the biggest things that are going to expire at the end of 2025 is the changing of the tax brackets. Before the Tax Cuts and Jobs Act, tax brackets were higher. Tax Cuts and Jobs Act made the tax brackets lower. So as an example, one of the lowest rates was 15%. That was changed to 12%, so a 3% change in that rate. The 25% rate was brought to 22. The 28 had a 4% change down to 24%. 33% only changed by 1% down to 32. And the 39.6 bracket was moved down to 37. And so that made that highest tax bracket, you were saving what, like 2.6% at that point, which, for being in the highest tax bracket, some people are multi-millions of income. 2.6% on millions of income can make quite the difference for them. And so if nothing happens in 2025 and the Tax Cuts and Jobs Acts expire, all of these rates will reset back to the higher rates. So based on that, every American will see an increase in their taxes in 2026 if nothing happens. We highly expect that there will be a tax law that will be passed in 2025 that will preserve these rates, but that's what we're kind of dealing with and looking at if nothing changes there. Now, as part of that, kind of interesting is that for years and years, for C corporations, the tax rates were really high. They were at 35% or even 39%. And the Tax Cuts and Jobs Acts brought those all down to a flat 21%. Now, this change in rate that we just talked about for individuals does not apply to C corporations. That 21% rate for C corporations was a permanent change, and we'll see no change when the Tax Cuts and Jobs Act expire at the end of 2025. There is a huge deal for all business owners in 2026. If nothing is passed and nothing changes, we've all been enjoying what's called the QBI deduction, the Qualified Business Income Deduction, which basically allows a business owner to only pay tax on 80% of the business income rather than 100%. Business owners were given a 20% deduction. So if you're a business owner and you made $100,000, you could have gotten a QBI deduction of $20,000 and effectively only paid tax on $80,000 of business income. It was a 20% basically discount on your taxes just for being a business owner. That is set to vanish and go away at the end of 2025. So if no action is taken, we'll lose that, which will then, in addition to the tax rates going up, you'll also lose the deduction, which will also make you pay more in tax. So we see taxes going up for business owners quite a bit if nothing happens in 2025. We expect during 2025 that this will be part of any kind of tax legislation that comes out, and this deduction will be extended, but we'll keep an eye on that and bring you updates as we see those. Another interesting part of the 2017 Tax Cuts and Jobs Act was it got rid of employee deductions for unreimbursed expenses. So before 2017 Tax Cuts and Jobs Act, if you worked as an employee at a business and you incurred expenses on behalf of your job that were not reimbursed by your employer, you could deduct those on your personal return as an itemized deduction. It was subject to a 2% floor, which means that it had to be more than 2% of your adjusted gross income in order to be deductible, but there was a place to deduct it. When the 2017 Tax Cuts and Jobs Act came out, it eliminated that deduction. So we lost that line completely on the tax return. It went away. You could no longer deduct your unreimbursed employee expenses. So if, again, no legislation changes this, when 2025 is done and this tax law expires, that will actually come back into play in 2026. So you as an employee could then deduct your unreimbursed expenses on the tax return starting in 2026, again, if no changes to that rule happen during 2025. That one, I really have no idea which way they're going to go on that one, so we'll see what happens during the year. Another huge part of the 2017 Tax Cuts and Jobs Act was the expiration of what is called bonus depreciation. So bonus depreciation allows a business owner to go out and buy a piece of equipment and deduct that equipment in full in the year of purchase. So if you go out and buy a $100,000 piece of equipment, you deduct it immediately 1 year, $100,000 deduction using bonus depreciation. Is what Tax Cuts and Jobs Act did is it said, okay, instead of giving you 100%, we're going to phase this down to 0 and we're going to do it over a period of years. So it started in 2023. 2022 you could do 100%. 2023 went down to 80, 2024 60. Right now in 2025 it's set to go down to 40%, 2026 20%, and then 2027 0. Bonus goes away. So as we go into 2025, right now we're dealing with a 40% bonus depreciation. However, it's highly likely that any tax legislation in 2025 will actually restore bonus depreciation back to 100%. This almost happened in 2024. At the beginning of 2024, the House passed a tax law that allowed 100% bonus depreciation to be restored in 2024 and ongoing. The Senate never took up that bill, so it never saw the light of day. It never became law, and we were left with 60% bonus depreciation for 2024. Since no action has been taken on that law since, we're dealing with 40% bonus depreciation in 2025, unless they pass a law that then restores that bonus depreciation to 100%, which if they pass a law, it will be highly likely that will happen. There was another interesting rule with the Tax Cuts and Jobs Act where they didn't want businesses to be able to write off too big of losses. So when you did your personal tax return, if you had a business loss of over $500,000, there was a provision that said you could only deduct $500,000 of loss, and anything beyond that would carry forward into future years when there was income or the ability to take those losses going forward. It didn't play into account too often, except in cases where it would have really been beneficial for clients. This rule is set to expire after 2028, so that goes even beyond 2025 and 2026. And so, but we'll see what happens with legislation. That could come back and change that as well. Another interesting change in the Tax Cuts and Jobs Act was, if you remember, before the Tax Cuts and Jobs Act, If you did entertainment, as a business owner had entertainment with a customer or a client, let's say they took them to a basketball game, a hockey game, a baseball game, or took them golfing, did some kind of entertainment or some kind of an activity with them, that was only 50% deductible. It fell into the kind of meals and entertainment. Those were both considered to be 50% deductible. For some reason, the Tax Cuts and Jobs Act said, okay, we'll allow meals to continue to be deducted at 50%, but entertainment is now 0% deductible. So if you take a customer client out golfing, and whatever you paid for that golf outing is not deductible on the tax return. That is not set to expire. That was a permanent change in the law. And so we will not see that coming back unless there's some kind of change in legislation that comes about this coming year. And so that's not everything that's going to change and everything that's going to expire and go on. That's kind of the highlights, the things that I notice will have the biggest impact on clients and people. And so again, we're going to see huge changes coming up here during this 2025 tax year. So make sure to subscribe and we'll update you with those changes as we see them come.